Peril and hazard. The terms peril and hazard should not be confused with the concept of risk discussed earlier. Let us first consider the meaning of peril. Peril. We often use the word risk to mean both the event which will give rise to some loss and the factors which may influence the outcome of a loss. When we think about cause, we must be clear that there are at least these two aspects to it. We can see this if we think back to the two houses on the river bank and the risk of flood. The risk of flood does not really make sense. What we mean is the risk of flood damage. Flood is the cause of the loss, and the fact that one of the houses was right on the bank of the river influences the outcome. Flood is the peril, and the proximity of the house to the river is the hazard. The peril is the prime cause. It is what will give rise to the loss. Often it is beyond the control of anyone who may be involved. In this way, we can say that storm, fire, theft, motor accident, and explosion are all perils. Peril is defined as the cause of loss. Thus, if a house burns because of a fire, the peril or cause of loss is the fire. If a car is totally destroyed in an accident with another motorist, accident collision is the peril or cause of loss. Some common perils that result in the loss or destruction of property, including fire, cyclones, storm, landslide, lightning, earthquakes, theft, and burglary. Hazard. Factors which may influence the outcome are referred to as hazards. These hazards are not themselves the cause of the loss, but they can increase or decrease the effect should a peril operate. The consideration of hazard is important when an insurance company is deciding whether or not it should insure some risk and what premium to charge. So, a hazard is a condition that creates or increases the chance of loss. There are three major types of hazards. Hazards can be physical or moral or moral. Physical hazard. Physical hazard relates to the physical characteristics of the risk, such as the nature of construction of a building, security protection at a shop or factory, or the proximity of houses to a river bank. Therefore, a physical hazard is a physical condition that increases the chances of loss. Thus, if a person owns an older building with defective wiring, the defective wiring is a physical hazard that increases the chance of a fire. Another example of physical hazard is a slippery road after the rains. If a motorist loses control of his car on a slippery road and collides with another motorist, the slippery road is a physical hazard, while collision is the peril or cause of loss. Moral hazard. Moral hazard concerns the human aspects which may influence the outcome. Moral hazard is dishonesty or character defects in an individual that increase the chance of loss. For example, a business firm may be overstocked with inventories because of a severe business recession. If the inventory is insured, the owner of the firm may deliberately burn the warehouse to collect money from the insurer. In fact, the unsold inventory has been sold to the insurer by the deliberate loss. A large number of fires are due to arson. which is a clear example of moral hazard. Moral hazard is present in all forms of insurance and is difficult to control. Dishonest insured persons often rationalize their actions on the ground that the insurer has plenty of money. This is incorrect since the company can pay claims only by collecting premiums from other policy owners.